Okay, welcome everybody to this SAGE podcast. This is very important. This is something on agricultural prices. We have Malieka Bordigioni, who is heading up working with the our FAPRI Ag Prices Center at the University of Nevada, Reno and University Center, and also Mike Helmer, who's emeritus, but who has a lot of knowledge and helps a lot on our forecast. Uh, it was kind of interesting this morning. I was watching CBS News, and the managing editor of the Economist magazine was talking about, that Russia and Ukraine are, like Russia is about the 17th lowest in industrial production. But if you put them as commodities, both those are giants in commodity production. So this is kind of important. And she got back, and I was thinking about when I was a master's at Texas Tech, when I took my ag policy course. I remember we would have parity prices. I don't know if you remember that, Bob, and those things. They were all based on the prices because of the food shortages that we had during World War I. Prices of ag were real high. It's kind of like what goes around comes around, doesn't it? It may take 100 years, but this is something that's happened because Russia and the bottom Russia and Ukraine mean a lot into wheat, corn, and some of the other things that Malieka will speak about. We've also done this because I do believe that the ag community and many of the sectors of our economy in the Nevada need to be aware how what's going on in commodities. Of course, gas is part of it too. How it's going to impact our Nevada economy. So, Malieka, I think this is going to be very informative. So, we'll take it away. And anybody has questions, please hold off. And if you have questions, if you see this as a recorded, please send them and we'll try to answer them as quick as possible. Thank you.
Okay, thanks, Tom, for that introduction. I want to talk to you today about all of the volatility that's been going on, not just in the ag markets, but in the economy in general and in the world. This is a high-level overview. Some of these slides I'll flip through quickly, others I'll spend a little more time on. I tried to design this to look at it from a 30,000-foot level of what's going on in the world and then filter that down, how that will impact us in Nevada, both as consumers and for the ag producers specifically. So what's going on? What's going on in ag and what's going on in the world? Of course, we have the terrible war in Ukraine. We're dealing with protracted drought, and all of this is coming on top of 2 years of impacts from COVID-19. With the war, the most critical impact to any of us, anyone in the world, is the loss of lives, the millions of refugees, and the upset in geopolitics that this has imparted on the globe. In terms of the refugees, there's about, I think in 2021, there was about 25 million refugees that had been displaced outside of their country. There's about 10% of that has happened just in Ukraine in the last 3 weeks. So that gives you a context for how severe this problem is. Again, not to mention the loss of lives. There's also a loss of global supply of food and energy and other natural resources that have come from the Black Sea region, where Ukraine, Russia, and other major players export their goods to the global market. I mentioned the protracted drought. Of course, we're in Nevada here, aware of what's going on in Nevada and the West. The drought is also severe in the Midwest, and there's a severe drought in South America as well. And of course, I mentioned COVID-19. We have 2 years. One of the major impacts has been how the supply chain inefficiency have really just locked in for all industries. We also have labor shortages. Right now, there's rising cases of COVID-19 in China, and they have a zero COVID policy. So their objective is completely locked down. And all of these, the war and the drought, just these events layer on top of each other and just make the problem so much more severe. So in terms of the war in Ukraine, I mentioned this disrupts the Black Sea ports. It's a major global exporting region. It results in restricted global ag commodity supply. So we're looking at total supply to the world of 30% of wheat coming out of that region, 16% of corn, 47% of sunflower products. And I'm going to go in a little bit more depth just to corn and wheat to give people context for what that means to people in the world. And then, of course, other natural resources that are restricted: crude oil, natural gas, and fertilizers. I'm going to go into more detail on all of these, but Russia is a major player, as is Belarus, in terms of the fertilizer, and they are more or less a satellite of Russia at this point. So there's a lot of commodities traded. Corn and wheat are the number 1 and 2 global crop commodities traded. Soybeans are also a very important crop, as is rice. Corn and wheat are used for both food and feed. Wheat, about 80% of wheat production is for food. Contrast that with corn, about 2/3 of total corn production is for feed, for animal feed. So that's something that, as we go through this presentation in general, you think that's something that we will see lagged impacts in the livestock sector from that feed. Corn is by far the largest commodity produced in the world. Wheat, it's about 50% greater than wheat. And then to give you context, wheat production is about 50% bigger than rice, and about 100% bigger than soybean. So these are really outsized commodities. As I mentioned, wheat food. So the biggest concern in my mind is the percentage of wheat that's used to feed people around the globe. And after 2 years of these protracted supply chain issues, there are already a lot of very hungry people in the world. This particular region provides about 70% of wheat supply to North Africa and the Middle East, which historically has struggled to maintain self-sufficiency levels. And then in terms of fertilizer, when we get to that, corn uses about 5 times the fertilizer as wheat. So just keep that in mind as we move through. I wanted to show you this slide. There's a lot going on here. I'm going to show you a similar slide for corn. So one of the things to notice here, or maybe the most outstanding, so when we talk about wheat supply and wheat production, or any commodity supply, production, and use, we focus on the largest traders and largest producers in the world. So when you look at this chart here, this shows the shares of wheat production and wheat net exports. So that's imports minus exports for all of the major players in the world, and there's about a dozen of them. So these are major traders overall, not necessarily major traders in wheat, but major traders and producers in the world. US major trading partners for sure. The bars represent a 5-year average from about 2016 to 2020, and the little dots represent what WASDE just reported. So what the USDA just reported for the revised March 2022 numbers, and the triangles are the same for the production. So the circles are the WASDE March 2022 net exports, and the triangles are the WASDE March 2022 production share. So what we see here is that even for the major traders, you see wheat is distributed in production and trade across these major trading countries. As I mentioned, the rest of the world, so everyone you don't see explicitly here is implicitly in these percentages. And what this is telling us is that the rest of the world, not represented on this graph, produces 20% of global wheat, but they're responsible for 90% of the imports. Keep that in mind. 90% of the net imports go to the rest of the world. They're not major producers. They produce about 1/5 of what they need. We can see China is relatively self-sufficient. So this, when you're looking at these bars, you see the darker shade is the production, the lighter shade is the net imports or exports. And when you see a very large dark bar, but a smaller light bar, that means that country is very self-sufficient. They don't need to import much. They're not exporting much. The same with the EU. EU, I think they export about 25% more of their production. About 25% of their production is exported. India, also one of the largest producers, very self-sufficient. And then here we see Russia and Ukraine. Note that Russia and Ukraine both had in 2021-22, their production is pretty average. Ukraine's a little bit above average, but that their net exports have been downgraded for March 22 for the remainder of this year. You also notice that Canada had a poor production year in 2021-22, as did the US. We were below average. This concerns me greatly because I worry about this bit falling out, these net exports falling out of the world, and that 90% that the rest of the world needs. This is a big chunk of where it's coming from. Turning to corn, this story is told in a similar way, but you'll notice there's far more concentration in both the both in the production, how it's distributed around the world, and in the net exports around the world. Corn is used about 60%. About 2/3 of corn production is used to feed livestock animals. So cattle, obviously, chickens, hogs, that sort of thing. And livestock production is associated with higher income. So the higher income you have, the better chance you have to feed these commodities to livestock and have a commercial livestock production. That's part of why you see it concentrated. There's also, and I am not an agronomist, but as I mentioned, corn requires much more fertilizer, more water. It has a more specific production geography. Wheat is produced much more widely around the world than corn is, not in greater numbers, but just grown in more places. So this is what we'll see impacting down the road. We'll have the lagged effects in the cattle market from that. So again, the triangles are the production. So you see with fairly average production. These are not adjusted for the WASDE 2022. So these are numbers from January, USDA in January. But you can see that there were some greater exports. So this is Ukraine. Ukraine they've been trading off with Argentina as the number 3 or 4 corn exporter to the world for the last couple of years. They're very important in corn exports, particularly to China. China's imports were coming almost neck and neck with US, or Ukraine was slightly edging out the US in China purchases. Here we have a graph. I grabbed this from the International Grains Council. So this shows for all Ukraine and Russia crops. So now we're not focusing just on here the corn and the wheat, but we can also see barley, which can be a feed substitute for corn. We see oil seeds, soybeans, rapeseed, sunflower seed, and then the byproducts for sunflower seeds. Here you see Russia and Ukraine, or Ukraine alone was providing over 50% of the world's sunflower seed meal and sunflower seed oil. Russia, another 25%. Oilseed oil, so sunflower seed oil, rapeseed oil, and to some extent soy oil are very important food products to the rest of the world. So all these countries with lower incomes, higher incomes too, but oils are very important food products to the rest of the world. And when you think of concentrated calories and food that folks need to eat. So this is a tremendous concern. Oil seeds are also been increasingly used for biofuels as well. So that is, again, this is a huge loss to the global market. This is a graph which Doug Busselman, you might recognize this graph. I stole this from the Farm Bureau report that just came out, because this gives you an idea of planning. So this is the Ukraine planting season. Russia's probably fairly similar to this. for some of these crops. You can see wheat right here. We are in March, so they're nearing the end of their winter wheat harvest. And I do want to mention another important factor is that wheat, unlike corn or soybeans or other crops, can be planted in winter season, spring season. It's predominantly globally planted in winter season because it's not competing against those summer crops like corn and soybeans and so forth. So winter wheat is extremely important and represents the largest portion of world wheat production. They're coming to the end of the wheat crop. I just saw something this morning that said, their wheat crop, Ukraine's wheat crop was coming in fine, that they should have an up note that Ukraine should have enough food for the rest of the year. They should have enough bread for the rest of the year. So that's very good. But you can see they're going to start planting. They're coming into their planting season for these other crops, most notably corn. And what's sort of not represented on here is the spring wheat. So they could plant some spring wheat too. And so now they're making these really difficult decisions. I mean, first of all, they're trying to do planting in a war, in a state of war. So like they're having aerial bombings. I mean, you think of people out there, I just can't imagine what they're going through trying to get crops in the ground under these circumstances. Then they're also making decisions about, do they use their fuel for tractors or do they use their fuel for their military? They're also struggling to get fertilizers in, which will help their crops be more productive. And one thing is important to think of too, Ukraine is actually the third most productive wheat producer in the world. So EU and China and Ukraine all produce around 5 tons per hectare. Russia is about half or less of that. So we're losing Ukraine as a wheat producer, we're losing one of the top 3 productive wheat producers in the world. And I mentioned fertilizer. So the next couple charts I want to show, I'm going to flip through kind of quick, but I just want to point out, so these charts were taken from an IFPRI report, and I have links at the bottom of all these slides of the sources here. This shows the percent of nitrogenous fertilizer exported by the Russian Federation and Belarus combined to the rest of the world. See shades up here. The US is getting like 20%. I think Brazil was getting about 20%. EU is 20%. And then potash. So this is the K fertilizer, the potassium fertilizer. US doesn't get quite as much potassium fertilizer from Russia and Belarus, but Europe gets a lot. Brazil gets a whole lot, and I'm going to show you on the next slide. One thing I haven't touched on yet is the importance of Brazil in the global market. They're not a huge wheat producer, but they are the top soybean producer in the world, and they're second in corn production. They're one of the only regions in the world that have the potential that have arable land that's not currently under production. So they probably have a better chance than any other country in the world to expand acres. But I grabbed this from a Farm Doc Daily report. You can see Brazil imports 85% of its fertilizer, 85% of all of its fertilizer. And when you consider the importance of Brazil in producing soybeans and corn, which are both very fertilizer dependent crops compared to wheat, this is really, this will just further exacerbate the already entrenched supply problems. Brazil has just in the last couple days, I think, put in place some policies to encourage domestic production of fertilizer, and they may see returns on those policies as early as the 22-23 crop for some of these fertilizers. I'm not going to go into detail here, but this is really important to notice the rates at which they import fertilizer for their production. In contrast, while the US is the third largest global fertilizer importer, it's far less dependent than Brazil. We have a very robust fertilizer market here in the US. and some potential to expand on that. You can see for some, so I mentioned that Russia and Belarus were um, the largest global exporter of potash or potassium to the rest of the world. We actually get most of ours for Canada. So that is a hopeful hopeful sign. Our phosphates from Peru and who knew? Trinidad and Tobago. I learned that this morning. It's one of our biggest nitrogen, but most of the nitrogen and phosphates are coming um, from the US. And I believe, and again, I'm not an agronomist, but I believe here in Nevada, well, I know this, alfalfa is our largest row crop production, and I think phosphate is the most important fertilizer for alfalfa. So you can see we only import 9% here in the US. Okay, so moving on from that bit of news, we are also in a protracted drought. This drought is the worst since about 2013 in the Western US. I'm going to show you a couple maps that represent drought in different ways, both for the globe, the US, then the US specific to crop production and Nevada. So right now, there's a really great, and I will be sure, though the link is here on the map that I'll show you. There's a really great map that they look at a percentage of crop acres by commodity type that's in drought. So for this week, wheat acreage, 73% is in drought. That is even from last week's number. Corn, soybeans, you can see these numbers are up. Hayes down, alfalfa push. So 65 for us here in Nevada, 65% of alfalfa area is in drought conditions. And unfortunately, the current temperature and precipitation forecasts expect this drought to persist or so stay the same or get worse. There's also a terrible drought going on in South America. USDA just downgraded, as I mentioned, Brazil's the largest soybean exporter to the world. They just downgraded soybean production globally by 1.5%. That is a lot of soybeans. 1.5% sounds small, but it's a lot. This gives you an idea of what's supplied. So Brazil's the largest soybean producer. Argentina's the largest byproduct producer. So meal is very important to livestock producers, so globally. And then they're also very important global corn supplies. One of an additional issue that South America has with drought, beyond just how that impacts the productivity of their crops, is that they rely heavily on river transport to get their goods to market. And this drought has been so protracted that it's actually impacted their ability to transport. So they're having to load either on more barges or use more labor. Basically, the cost of getting their goods to market has gone up dramatically because of the drought and their reliance on river transport. I'm going to flip through these pretty fast. There's three, I'm going to show you three global maps. These are, I'm going to show you groundwater, root moisture, and soil moisture. So what these maps are showing, where you see the red, this is basically based on an average from 1948 to 2012, what they would expect the groundwater to be. This shows you the percentage of where the groundwater is at for what they would expect it to be over that period of time. So you can see these major areas of production: Europe, the Western US, Canada, Brazil and Argentina, Africa, persistent shallow groundwater. We have the same, so this is the root zone moisture, and it's the same area. So these maps really, to my mind, get across the idea of how persistent this drought is and how much precipitation it will take to bring back more beneficial and productive farmlands and just water availability around the globe. And then here's the soil surface moisture. So when you look at these in succession, you really see it's not just one aspect of this, that it is really compiled. Here we see the US Drought Monitor. Right now, 60% of the continental US is in drought. We see it is persistent across the West. And the next slide I'm going to show you is for alfalfa acres. But this is a major winter wheat area in here, and you can see how severe the drought is. I think Texas and Oklahoma just got downgraded for their winter wheat production. Very important for U.S. total wheat production. This is one of the the ag acres. So these, you can look up these charts. I have the link up here. You can look this up for corn, soybeans, hay, alfalfa. In the interest of time, I'm focusing just on alfalfa here. So where you see the very dark shaded areas, that's a major alfalfa producing area. Where you see the lighter green, that's a minor hay producing area. And then the red lines are the drought. So you can see 65, this is the most recent publication of the Drought Monitor for this. 65% of alfalfa hay acreages is an area experienced drought. Now, this might range from D1. So drought goes from D1 to D5, I believe. So this doesn't tell you how much. You can see that on the maps, but there. So and I just want to focus on, keep this area in mind right here. So we see this is a major alfalfa area here. So when we flipped the Nevada map, we can see this was that major alfalfa producing area. And you can see part of that, sorry, is in extreme with creeping exceptional drought. So we're looking at, further challenges for our Nevada alfalfa producers and livestock producers. And one would think that moisture precipitation would be beneficial, but I can say that not always, because there's also potential for flooding in the Midwest here in spring 2022. So you can see, again, you might be looking at spring wheats up here, maybe some barley. This is going to be corn and soybeans, and you have this moderate risk of flooding here, and that can interfere or delay planning, hopefully not prevent planning, but definitely delay planning and impact productivity of those lands. I also want to mention that there were also severe flooding in China in the fall that delayed about 30% of their winter wheat planting as well. I haven't seen that their production's been downgraded, but grain of salt there. So moving on, what does this mean? So Tom mentioned prices. Let's talk a little bit about prices. First, we have here, I captured these this morning, crude oil and natural gas. Natural gas is a major input to fertilizer production. Crude oil prices, I'm sure you've all heard this, crude oil prices are up about 47%. They're up on the day. Natural gas is up on the day. Natural gas is up 30%. We're coming into, the Northern Hemisphere is coming into a warmer period, so the increase for heating natural gas will decline, which gives us, again, that's a small upside here. And you'll also notice, you can't tell as much with the natural gas, but they're both off their recent highs. The recent high in the crude oil market was a historic high. It had hit, I believe, $130 per barrel, which was a historic number. I should mention these couple of price graphs where you see these squiggly lines are all futures markets. So these are not actually the prices that are actually being paid. These are futures markets. But that is very telling of what prices are now and what people expect prices to be. Moving on to corn, soybeans, and wheat. Soybeans up on the day, wheat's down, and corn is pushing. You can see wheat prices are up. So with the natural gas and oil, we were just looking at since December 31st as a marker. Here we're looking at year over year because crops have a seasonality to them. So we want to compare them not to a couple months ago or even a couple weeks ago. It's better to look year over year because that takes that seasonality into effect. Again, these are all off highs as well, but wheat is up 72% year over year. This is just, and when we talk about prices in general, and I am not a macroeconomist, so I can't, I don't know that I can provide good information on macro behavior, but inflation can be impacted by supply and demand. we first saw, if you would have asked me a year ago about inflation and rising prices, I would have said it was transitory, maybe based on supply chain hiccups and so forth. A lot of folks think that prices got driven up by the government payments that were received during COVID-19 and trying to help households out, that put more money in the market for people to spend. And then that increases demand when people have more money to spend, and then that drives up prices. Right now, in my opinion, what we're looking at, it's a supply issue. We're having chunks of commodities removed from global markets, and that is having an even stronger effect than any demand side. That's my opinion. I'd be happy to hear other economists' inputs on that. Here we're looking at U.S. Alfalfa prices. I have 5 years. Again, we want to look at the seasonality. So we have price pass for 5 years going back to 2017. The lighter the line, the farther back the year is. So the darker the line, this darkest line up here is 2021. And we can see, all of these years really have tracked very closely together. I mean, a little bit more, a little bit less. But here you see a meaningful divergence. In about last May of the alfalfa prices. Drought, livestock industry to some extent, but if I had to guess, this is really just the exacerbated drought driving these prices up. And then I have the most recently published USDA price for January 22, which is not showing any signs of those prices abating. This is a chart I captured from a site called Cattle Range that shows state prices. I'll show you U.S. prices in a second. State cattle prices or feeder prices are about 20% up on the year. The livestock market in general there's a natural livestock life cycle with kind of lows and highs. So herds tend to be bigger and then they back off and then they grow again. It's just the natural life cycle of herds. We are closer to a trough than a peak, which will naturally drive up prices. We also had some thinning in livestock herds during the meat supply chain hiccups in 2020 that we're still realizing the effects of, but we are about up 20% over the year. This is the US feeder cattle prices. I tracked this back 20 years because one of the things I wanted to point out is when you see ups or downs, you can see, prices move up and down all the time. We're pushing on the day right now. We're flat on the day, just about. We had this historic high in 2014-15. That was an anomaly. We're nowhere near that. But we are in the second highest price period of the last 20-some years, 25 years. So prices are very good for livestock producers right now. Milk, similarly, you can see the major price volatility that happened during the initial COVID onset and then recovery. We had milk prices tank with the closing of commercial and government businesses, schools, colleges, and so forth. And then you just had a ton of volatility. Right now, our prices are very high. This is also a supply issue. So with decreased labor, and I didn't really touch too much on the labor force right now, that's we're having trouble. All industries across the economy are having problems keeping employees. Employees are moving. It's sort of an employee market right now. And so employees are moving for the highest dollar. Industries are having trouble retaining employees, retaining experienced employees, and industries, and ag is one of them, is also having trouble getting products. So they have inputs to their production. So even though the prices are very, very high for those inputs, sometimes even when they're willing to pay those prices, they're not able to get the supplies because of the hiccups in the supply chain. So how do we approach this? What can we do about how can we address any of these issues or try to minimize the impacts? First, I want to mention that any approach, just like all of the impacts, are at a global national and state level. This isn't something we can just do at the US or just do in Nevada or just do with trade organizations. It really requires a lot of cooperation. Expanding self-sufficiency, whether that's at the state level or federal level, may be able to help minimize. I keep mentioning the supply chain hiccups, particularly the meat supply chain. A lot of those failures and a lot of the breakdown was related to the fact that the supply chain is optimized for efficiency and low cost at a trade-off for sort of resiliency and sustainability. So if we can build in some more resilience to our supply chains, that might help minimize some of these impacts going into the future. And then, of course, so that's a direct impact. We can, look at how we produce and what we produce. And then in terms of the inputs, such as energy and fertilizer, again, we can look at producing more of that to try and bring down the prices. There's going to be a lag timeline here. This is not something that's going to happen tomorrow. I've also been reading a lot about expanded planting area for crops, specifically wheat. In the US and in the EU is where I've read the most. I mentioned Brazil, but Brazil is going to be challenged with their fertilizer needs and the drought. EU and US maybe have the best chance to expand wheat acres. I've read, and I'm not saying this is happening, I've just read people talking about taking CRP acres out, but still allowing farmers to receive payments. I've seen, you're going to look at folks trading off different commodities. So maybe more people will plant wheat because the wheat price is so high and plant less corn or less soybeans. But that is an option. But it's somewhat limited because globally, I'd say, like I said, Brazil being the exception, globally, we pretty much have all of the productive areas planted that are productive at a reasonable cost to still get a profit margin off the top. That's not true to every single acre planted, but generally speaking. And then we also need to look at trade policies, but balancing those policies to ensure adequate supply for demand. So you may have read about some countries are putting export restrictions on commodities, which is understandable. And that's the first thing you think, oh, well, I'm going to keep mine, right? I'm going to keep the flour that I have. I'm going to keep the wheat that I have. And to some extent, or some proportion of that, that makes sense. But making sure that your neighbor is fed when you're fed, food security works against global unrest. When you look back at the Arab Spring, there'll be people that or a lot of research, and there's arguments, I'm sure, either way. A lot of discussion was around the fact that those countries where we saw a lot of the uprising, people were running out of drinkable water and food. And so if we want to contribute to global stability, food security is a very important issue. And then just directly when not just when anybody puts protective measures in place and pulls commodities off the market, that will further drive up, it reduces the supply and will drive up prices pretty quickly. Then what are the impacts to Nevada? So both consumers and ag producers specifically, we're going to see prices continue to rise. We're going to have increasing revenues. As I mentioned, livestock producers will probably see some pretty great revenues this year, but we're also going to see increasing costs. Some of those will be immediate, such as the cost of fuel. There'll be a lag effect when you're talking about fertilizer or any changes to the livestock growth cycle. Nevada ag production, I mentioned, alfalfa is our largest commodity that's produced here. And here in the US, we produce 90% of the fertilizer that it wants most, which is phosphate, I believe. So we've minimum, and we are not feeding out a lot of livestock here either. So we're going to have relatively minimal direct feed and fertilizer impacts. However, we will have very meaningful direct drought impacts when we're looking at grazing quality and quantity with the exacerbated drought. We will have delayed and direct cattle industry impacts. All of these impacts, if everything just magically improved today, we would still expect to see lags over at least a year, if not two or more. And then in terms of Nevada specifically, how will all of these changes flow back to household incomes? How will these rising prices, how will this disruption, how will these wartime issues impact individual household budgets in Nevada, in the US, globally? We are a global market, and we would not want to move off of that and still maintain our quality of life, in my opinion. How are these changes to consumer budgets? How will that flow back to demand and demand for meat? Because as I mentioned, livestock products are really something that folks have the privilege of eating when their incomes get high enough. And then, of course, that will flow back to the feed demanded as well. And with that, my dismal science, and we'll be happy to take any questions, or I talked much longer than I intended, but.
Malieka, this is Doug Busselman. One of the questions I guess that I have relative to Nevada agriculture, because of the drought that's now in its third year at least, we have anecdotal information that livestock producers have been reducing their herds because of the drought conditions and their inability to feed the animals that they've got. Is there any kind of tracking mechanism that is in place that would provide the details on how much of the cattle reductions have happened over the past several years and where we are now?
Yeah, so there are people who do research specifically, like on forage quality and quantity and how drought impacts that. And I can't speak to that specifically, but one could look back at AUMs that were issued. They adjust AUMs. In the West, you could look at price and availability of private grazing lands over the last couple years, and that might give you an idea of the trend in terms of what that will look like in the future. And Mike Helmar, you might have more information about this. I don't know off the top of my head about any AUM predictive modeling or anything that might incorporate climate impacts. Is that what you were asking, Doug?
I'm probably looking more at cattle numbers than I am. I think that even in, I don't know that AUM numbers actually are accurate. And I say that because there are sometimes where AUMs are maintained, even though there may not be animals that match up with those. And so I guess I'm mostly interested in understanding what the trends are and the outlook is for cattle numbers, especially in the beef herd.
Yeah, Doug, if I may, Malieka. Actually, the inventory numbers by state are put out each year. There's January 1 numbers, so what the inventories were for January 1 have been put out by the USDA, and we can track those. And you're absolutely right. We've seen a decline over the last few years. They leveled out for a little bit, but I suspect the January 1 numbers this year are going to be a little bit lower again. And to your point, Doug, I think you to the drought, a protracted drought. So not only does it for the ranchers who are using all their grazing land, the quality and the quantity of feed out there is less, and they'll have to reduce numbers, and because of the protracted. But the other thing that I want to get to, I kind of want to link this to what you're talking about, Doug, is not just the beef cattle side, but the dairy side. With the reduction in, and I think we saw it last year, correct me if I'm wrong. I'm retired now, so I don't look at all the numbers all the time anymore. But I think last year some of the water were reduced, And I suspect they will be again here. And that will have a big impact on, particularly for areas that grow alfalfa, it's all irrigated, and areas like around Fallon that grow corn for silage, that those feeds for the dairy industry is going to be a little constrained this year. And I think that's going to cause a problem there. And you saw the class 3 milk prices. Those are very high, and a lot of that is from the cost side as well as that side. So now we need to start thinking about the implications for the whole milk powder plant in Fallon. I think water goes both for the beef side and for the dairy side.
Well, I think the dairy industry is not only having to deal with availability of feed, but also the price of feed. When you look at what's happening with corn and soybeans, and the prices there, those are also becoming difficult for the cost to match up with what the expense are. I just read a Farm Bureau report today that spoke of the concerns that agricultural producers have right now, in spite of very high commodity prices. The increases in the input cost may be outstripping the revenue that they might be able to generate, and how that may cause ramifications as well.
Absolutely. So that means that issues go beyond just the water availability regionally to whatever is driving up prices. We know what's driving up the prices nationally for those feed inputs that we have to bring into the state. A lot of them from the Midwest, the soy meal and the corn. You're right, Doug. Absolutely, good point.
Yeah, that's right. And I apologize because I sort of glossed over that when I said there wouldn't be a lot of direct impacts to Nevada producers and our dairy industry, which is a significant industry and a significant exporter from Nevada. And they will feel these rising costs of inputs the most. And I don't doubt, Doug, what you say, that they could start seeing their costs outstripping their profits or their revenues. Any other questions?
Hi, Malieka. This is Loretta. Great presentation. I was just wondering, is the center pursuing a study to try and track these differences between basically what the potential profit, if any, might be given the rising cost of inputs, although the rising prices of commodities? Are you guys pursuing this? Do you know if anyone is? Because I would love to see that. That's going to influence farmland rental prices, farmland prices. It's going to have a major snowball effect. So it would be really helpful.
Yeah, I think every ag-related economist in the world is asking those same questions right now. And it is so volatile and so quickly changing. I just saw this morning, and I didn't even get to read, or I only heard like half the story, that there's something going on with nickel markets now too. So it's just layer on top of layer on top of layer. We could think about what we could do to discuss that. I will be, so in April, I plan to release the annual Nevada Ag Outlook. And I will, in that Ag Outlook, I will certainly touch on many of these issues and try to incorporate the most current information available at that time to talk about how things might change. But there are just so many moving pieces right now. But that's what I would look for, Loretta, is look in April. And I will probably, maybe the end of April, beginning of May, will be doing another podcast where I'm presenting the Nevada Ag Outlook findings and discussing how the current prices impact that outlook.
Thank you.
Very good, Malieka. Thank you very much. I look forward to catching up with you a little bit later, going down the road.
Sounds good. Okay. All right. So before you all can start hearing my 20-month-old screaming for mama, I will, if there's no more questions, we'll sign off. And I thank you all so much. And yeah, feel free to email me. You can get my email on the UCED website and email me. I'm happy to share the slide deck or, talk with you more. Thanks so much. Have a great day.
You too.
All right.
Thank
Thank you. Have